You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. I think I'm getting my voice a little bit back. I was struggling earlier this week. My voice was going, but seems like it's rallying here towards the end of the week. So I should be able to close out the week in style. It's a good thing. We have a bit of a holiday hiatus coming next week. Give it a chance to recharge. But we're still here. We're still going strong. 1 p.m. Central, 2 p.m. Eastern for all your volatility views, analysis. Of course, listen live or after the fact on your device of choice, wherever you listen. If you like what you hear, make sure you leave some reviews to help other folks continue to find this program. This program has been cranking away for many years now, and new folks continue to discover it because of listeners like you. So keep that love going. Get out there to your platform of choice and tell people what you think. And of course, however you listen, make sure you leave us a question, a comment, some insight, some pearls of wisdom. We do indeed like to hear from you guys. And joining me on the program, a big week for Vol, a lot to break down. First off, we've got the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, welcome back to the program, sir.
Good to be here. Great. You know, it's great to be here. I was on the train this morning with our friend Matt Benson, Tubby. And
never heard of him.
Yeah, and actually, interestingly, most of our conversation was around a beef bolognese he was planning on cooking, and thankfully, I used my greasy meatball skills to improve his recipe.
You mean you weren't talking about the Cybertruck? Aren't we all living in a post-Cybertruck world, sir?
Mad Max and the Thunderdome?
It's all about the Cybertruck, baby. And
that thing is, I mean, it's a cool. I think that is. It looks like one of the bad guys from Terminator 2.
Yeah, it looks like a fever dream of like a 14-year-old boy from the 80s. Drew that up on his Trapper Keeper,
exactly.
And somehow it sprang to life.
If they made a DeLorean a giant truck.
Exactly. Exactly.
Now, to his credit, it's better looking than the Model X. I will say that, but
that's damning with faint praise.
Only redeeming quality.
I was behind the Model X the other day, and the doors are cool when they open from behind. That's really about it. That's really about it.
You know what? So was a DeLorean, but the thing looks like a an Aztec and a DeLorean and a Ford a Hyundai Accent had an unholy love child.
Yes, that's exactly the blend I was thinking of as well. Apparently the market not liking what they're seeing. Tesla getting whooped off nearly 6% over 20, nearly 21 handles right now. So apparently the love for Cybertruck. It's a post-Cybertruck world. We're just living in it. And, he was so excited by the announcement of Cybertruck, he had to get up at some god-awful time over there in Sydney just to beam in and tell us his thoughts about it. Of course, you know who I'm talking about. Holding down the MIAX hot seat, Mr. Simon Ho, the CEO of T3 Index. No other reason he would want to join us this week. It's all Cybertruck, right, Simon?
Oh, absolutely. I was up late watching that. It was awesome.
Yeah, hopefully.
Great. It was so funny to see the windows break.
Yes, that was the best part. And now my bulletproof windows smash. Oh, I think you threw it too hard.
Bulletproof windows, and then
yes.
The windows broke.
Tell that to the person who's shooting at you. I think you shot at me too hard. So yes, it's all Cybertruck. We're just living in it as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, let's get to it. I was just joking, of course, about the Cybertruck. Even though it is funny, it's got to be up there as one of the best demo fails of all time. Look at my bulletproof windows. Oh no, smashed. You threw it too hard. I don't think that works when people are shooting at you. But c'est la vie. Let's get on out to what's moving the broad market. It's been kind of a weird week. Last couple of weeks, we were talking about this strange euphoria that seemed to have gripped the marketplace. Everyone was just assuming the trade war was a done deal. It was in the rearview mirror. Markets were full-on go-go rally-ho mode. Vol was coming off. It was just euphoria out there. And then coming to this week, we find out, maybe it's not so done. And maybe we won't even get a deal this year. And all of a sudden, that's enough to spook the markets. We saw some down days this week. We saw some vol coming back in. Ending the week now, the markets were kind of off to unch today. Now they're starting to get back into some slight rally mode here to end the week. We've got the S&P, once again, the Goldilocks, up about 0.15%. NASDAQ pretty much unched slightly to the upside. And then the Dow up about 1/3 of a percentage point. Gold and WTI taking a break if you want to hear about all the conspiracy theories and the theater surrounding crude and everything else. Check out TWIFO. Should be already on the network as you're listening to this. So don't tune out of all views. But once you're done with this, go check out TWIFO if you haven't already, because a lot of interesting stuff going on out there. What is the Saudi Aramco IPO? What does that mean for the future of crude? Some interesting stuff, actually. You might be surprised. That's a fun one if you like crude. I know a lot of you do. From a volatility perspective in particular, what does that IPO mean for crude vol? Maybe some interesting things going forward for that. And in terms of vol, a.k.a. VIX, it's at about a 1260 or so, puts it off about 0.5 point today, and that puts it up slightly, about 1/3 of a point from where it was this time last week on the show. And our old friend, perhaps Mrs., I haven't decided, Mr. or Mrs. Spikes, at about 13.5, that puts it up right almost 2/3 of a point from where it was this time last show as well. And our old friend VVIX, a.k.a. the vol of vol, up about 2.5 points to about a nice and robust 94. All right, Simon, you're our guest. We'll start with you. Aside from Cybertruck, and we'll get to the other big stuff in a wee little bit because we're about to get there. But first, regale us, sir, with what lit up your tape just from an overall volatility trends and developments perspective this week, sir.
Well, I missed the show last week, so that was a bit disappointing. But I come back this week, and the term structure is almost identical to when I left it.
Yeah, it's like you never left. So, nothing happened in the intervening 2 weeks, sir.
Exactly. So, what I mentioned then and what I'll say now is I think that the front months it's quite steep. You've got a contango of nearly 12% there, so that's pretty enticing for somebody. And given how much higher that is than the cash, I'd have a moderate sort of short position on. That's kind of what we favour for the moment. In terms of, and otherwise, I guess very interesting. I'm sure you guys all saw the Wall Street Journal article today about the huge position that Bridgewater has put on. So no doubt, we can spend some time.
They're now
as well.
denying that it's them. Ray Dalio just came out and said, "Not me."
Oh, right. Interesting.
So, I don't know if that he's allowed to lie about that, is he?
Well, Simon, since you brought it up, why don't you overview it for our listeners really quickly?
Yeah.
Yeah, right, sure. So that's from the Wall Street Journal that Bridgewater Associates, one of the largest hedge funds in the world, spent around about 1.5% buying out of the money put options on S&P. So given the size of their fund, I mean, it's an absolutely ginormous position. And supposedly, according to the article, it's basically these things will expire in March. So the view here is that sometime between now and then, they're expecting a big fall both in S&P and also in the Euro stocks. That was what was reported.
Yeah, you can check it out for yourselves. They're over there on the Journal. Listeners, Miss Gunjan, and it looks like someone else, Juliet Chung, who I'm not familiar with, teaming up for this one, saying they spent more than $1 billion. They love that. The Journal is fascinated for some reason with the net premium outlay of trades. I don't know why that is. That's what they like to fixate on. So not the contracts, not the other thing, not the strategy itself. It's how much is spent to pursue said strategy. But you're right. This is, shall we say, a wee bit near term. $1 billion, that's not getting you a lot of time out to March. So interesting stuff. I'll have to dig in and see exactly what strikes. Also on the Euro Stoxx 50, it's worth doing too. So they're not just staying domestic. They're also going abroad for a little bit of volatility. I'll have to dig in a little bit, see if I can find exactly what strikes they're up to. Mark, did this trade come across your radar? And indeed, what else came across your radar this week, sir?
Well, it was interestingly, I may have been helping them do some calculations on what things like notional value meant.
You're the reason it says $1 billion. I blame you, sir.
Yeah. I may have explained the premium outlay versus notional value, but allegedly they have about $100 billion in $100 billion in quote unquote notional, which would be 70% of the value of the fund, but they're spending 1% in putting on a hedge. And not to quote our friend Mr. Tusa, when has there ever been a better time to hedge the S&P than when it's right at an all-time high? You've got the VIX relatively low. That would help explain some of the craziness in March term structure. We were looking at this today in me and Andrew in our option pit show that we do on Fridays, and the term structure right now is absolutely crazy high relative to what we've seen in the past. I was looking in, kind of trying to compare what we look like now relative to what we looked like in July. And at the end of July, the VIX was around 12.5, just like now. But the options that had 4 months to expire, which would have been November, were trading about 16.5. The option that had a month to expire was trading about 14.5. Here we are. The options that are about 4 months to expire, we're still around 12.5, right? The VIX are at 18.20, and the January is still 17, and the DEES is 15.5. So we have a really, really steep and expensive term structure. I'm sure Simon has the stats on this, but relative to kind of 30 and 60 days to expiration and 90, if you were going to create like a normalized future, in terms of like percentiles, and I'll give you a minute to answer this if you'd like, Simon. In terms of percentiles, where are we in terms of how expensive a normalized 30, 60, and 90-day future would be to the cash index?
Yeah, talk about putting me on the spot. Thank you. Nice one.
Yeah,
Nicole.
you're welcome. Love you.
So, as I mentioned, my first comment was that I agree with you entirely. This thing is insanely expensive, it looks like, especially given where the cash is. So, the only context I can give you is that the contango in the first contract month is around about 12%. And it really doesn't get higher than 15 for very often, for very long at all. So, it's not that far away, 12, 15, I guess we're 3% away, of course, but this is extremely steep. I agree with you. I don't know what the percentile is, unfortunately, off the top. The range is typically 15% is kind of, about as high as it typically gets. So we're not that far away from it. It's quite extraordinary.
Well, while you guys were breaking that down, I was able to pull up the actual comments from Ray Dalio, his response to the article. And he sounds like he's hedging his bets a little bit, pun intended, because he said the Wall Street Journal wrote an article that said Bridgewater bets big on market drop. It's wrong. I want to make it clear that we don't have any such net bet that the stock market will fall. So this just proves that he's just hedging. It's a pretty aggressive hedge. It's only between now and March. And so that alone is probably worthy of some analysis and some merit. But he's disputing, I think, the overall characterization of that he's just going in and just swinging for the fences all downside all the time. He's clearly still long equity. He's just got a hedge on.
This was something I was actually explaining to the person that was asking me some of this. I was like, there's no way this is done without the other side. And, the reason why he's doing this, which of course, why would they put this in the journal when it's valuable to them? The reason why he's doing something like this is because he believes in the market, not because he thinks we're going to tank. But he does think that the odds of some sort of pullback are maybe higher than he did prior to these trades. And, the one thing we did notice with the timing of this is all of the major primary elections are before this expiration. So this could be kind of, you might call this the Sanders-Warren put more than anything, in that, I think unilaterally a lot of traders are nervous if either of those people get the Democratic nomination because of just kind of what they would do to the overall stock market.
Do you think it's a very specific targeted Sanders/Warren hedge? Interesting.
Yeah, and I think probably leaning more Warren than Sanders. One, we're at an all-time high. 2, VIX is relatively low. 3, the timing of that trade would make some sense around. That's when we're going to get some clarity. And and you're saying, boy, think about it this way. Nobody, and I was in my pit chat, and everyone's like, "Well, Warren's not getting the nomination." And I said to them, "Okay, in November of 2015, who here thought Trump was going to get the nomination?" And that made a lot of people go, "Oh, yeah, maybe he's got a point there."
You can go back and listen to a live episode that Russell and I recorded of this very program, Volatility Views, on election night. As it's the only time you've ever done this, and it happened to be a historic night, so it was good timing. And it wasn't until about halfway through that show that I think he actually beamed into me and said, by the way, I think Trump just won Ohio, where both of us said, oh, it all of a sudden, it took that long for it to click, at least for us here on the show. I'm sure a lot of people out there, that this was a legitimate, viable contender for the Oval Office. And so a lot of people, you're right, discounting contenders these days at your peril. But interesting stuff. And Mark, I find your characterization that a reporter for a major financial publication would A, not understand the gist of what you're talking about when it comes to options, and then B, would choose to overly highlight a sensational aspect of that. I find that to be wildly scandalous, sir, and unbelievable.
Yeah, I know. But I'm thinking yes. I can't believe that they would. It's amazing how reporting in black and white terms makes on a gray newspaper makes when actually everything is gray makes the most sense. You know what I mean?
Now you know why I started forwarding all of these calls to you. My life is so much freer now as a result. So I thank you, sir. You can deal with all that fun madness. Speaking of fun, we had some fun popping off in the vol space this week. We were just talking about the crazy term structure out there in the VIX futures. There's I think the technical term is a chasm between the D's future and the cash right now. That looks like about 2 1/3 or so points out there, which is just enormous. And so we're talking futures. You may have heard, listeners, there was a new addition to the futures party this week. Mr. Simon, we've talked about it. We've discussed it. We've anticipated it for months now here on the program. Shelley's talked about it. John's talked about it. You've talked about it. We were hoping that November 18th would go off without a hitch. That would actually happen. We wouldn't get some last-minute regulatory hiccup that would keep things from going live. But November 18th came this Monday, and lo and behold, Spike's futures are live, sir. It must have been an exciting day for you. I know you were excited when the options launched, but this is kind of like another one of your children coming into the world out there. So, it must have been exciting for you. And so, walk us through all of that. How did it all go? How did the launch go? How has the week been? Regale us all with that, sir. How's it been so far for you guys?
Oh, look, it's been fantastic. Yeah, as you can imagine, we've been waiting for a long time for this to happen. We finally now have the full complex of products that people need to trade. Before there were just options, so that was hard for people to hedge. So now we have the hedge. We've got the tie trades. We pretty much got the whole kit and caboodle. It's funny that you say that. We could not have said anything about it before, but at the very last hour, last Friday, there was a potential snafu, but thankfully the team got through it and we were able to launch on Monday as planned. So, yeah, in terms of, it's going pretty well on our third day. I think we had like 72 futures contracts trade, which, you're always going to start off fairly slowly, but we're seeing some stuff coming through, and we're seeing that the options prices for spikes are actually starting to tighten as well, which makes sense because, people now have a good hedge for themselves. So in terms of a summary, we went live on Monday. We have a really good group of market makers. So we have a market maker program, which is truly excellent. So this thing is, as people may well know by now, it's provided by MGEX, but it is powered by the Globex platform. So essentially anyone who has connectivity with Globex, it's very, very simple to access this product. The parameters of the thing are essentially the same in terms as VIX futures in terms of the contract size, specifications, and so on. We also have market making for 3 sessions a day, so essentially like 23 hours per day. So that was really cool. And the other thing is, I guess, for investors and listeners of the show, one of the key parameters, as we've been talking about, is, better, tighter, cheaper, faster. And one of the things is cost efficiency and, the fee associated with the Spikes future, which for all intents and purposes is the same as the VIX future, is 25 cents. So we're hoping that really resonates with the investing public. That's kind of it. Couldn't have asked for a better launch, I don't think.
Yeah, when I saw that date coming up on the calendar, you always wonder about some last-minute regulatory curveball. I've heard horror stories of many of those things going on behind the scenes. I know how challenging it is to get any product. It's if there is one complaint that everyone is united in this industry, I don't care how fractious it may be, what side of whatever fence you may fall on, everyone is united on the fact that it is pretty freaking hard to get a new product all the way out to market through all the regulatory red tape to get it into the hands of the actual trading public out there. So the fact that you got the spikes out there, that's the future. Good to see. You don't have to rely on. We've been talking about combos and synthetics out there for so long. It's nice to have an actual future. And of course, as you're right, I noticed that as well this week, starting to see some of the options tighten up out there. It's been an interesting phenomenon. I was actually talking about it last week on the show when you weren't on. Because I think a lot of people were looking at the future this week, so most of the size OI is still pretty much the same out there in Spikes options. Let's go on the top 5 really quickly. Number 1 and 2 really is still that 1x2 that's kind of been dominating the tape for some time, even though he did roll it. We talked to Dees recently. He did come in and roll it. It's out to Jan now. It's 26,000 of the Jan 26s against 13,000 of the Jan 17. So that's a big print going back onto that one. Then we got the Dees 27, still 8,600 of those. And number 3, the Dees 18s, 4,300. And number 5, round out the top 5 here. The Jan 18 calls, total of about 52,000, which has kind of been the OI for a little bit here. But interestingly enough, Simon, and maybe this was even pre-futures. I haven't had a chance to check as much this week, but it does seem like we're starting to see anecdotally, we're seeing these big ones. We're seeing the 13,000 by 26,000s going up, and that stuff's certainly exciting for you guys. But I also like to see that we're starting to see some, 5 lots and 10 lots and 50 lots and some of the retail starting to trickle out there as well. Have you noticed that as well, Simon? And maybe have you noticed that pick up in the wake of the post-futures tightening?
Yeah, absolutely, yeah. I mean, it's fun. Ignored the 5 and 10 lots, right? You're kind of looking for the big ones. But no, I think that is a really positive sign because, you have a few big customers that do the trades that are on there right now, but, you need to broaden the base and you need to sort of widen the distribution. And that's, I think, exactly what's happening, which is why you're getting these some more frequent, smaller trades come through. I think that's a very healthy sign for the product, to be honest.
That means it's getting out there, whether they're listening to a show like this or they're learning about it through their brokerage platform or wherever the case may be. It's starting to get out there, and they're starting to be able to trade it, which, of course, can help grow the ecosystem all the time. Big prints are great. They pay the bills, but you don't get more of those unless you have the small trades that kind of percolate into those over time. So it does seem like we have some of the latter. Let's head on out to the VIX options landscape now, see what's going on. After we've been talking for a while here about that ADV kind of a road. It seems like last week was maybe that inflection point. No sooner did I bring it up on the show last week that they were threatening to break 300,000 in the wrong direction from an ADV perspective in VIX last week that all of a sudden the worm kind of turned. So apparently they were listening because that's pretty anemic volume for this time of year, listeners. And now it's back up to I wouldn't say respectable, but a more respectable 399,000. So it's threatening to break 400,000 in the right direction this time. Today's volume pretty decent. Coming at Showtime, we had about 200,000 contracts on the tape, so about half of that ADV. Let's see what people have been up to out here. What are the hot positions, the big positions out here in VIX land right now? Number 10, we've got the DEES 23s, 127,000. Number 9, we've got the DEES 37.5. Once again, that 37.5 strike continues to hold sway out here, 146,000. Number 8, the DEES 25 is 149,000. Number 7, the DEES 15 puts, our first put here, 150,000, pretty much even out there. Number 6, the DEES 20s, $163 on the tape. Number 5, DEES 22s, 176,000. Number 4, the DEES 16 puts. Now we got a nice little push strip here. DEES 16 puts, 177,000. Number 3, 199,000 of the DEES 13 puts. Numero deuce here, the deuce. Lots of deuces. The DEES 14 puts, there we go. 222,000. Lots of twos on my screen. 2 for 222 of the DEES 14 puts. And number 1 with the bullet this week, the comparatively light DEES 21 calls, a little bit shy of 250,000 of those. That may sound like a lot, but in VIX land, that isn't that much. And a total of 6 million even out there in the OI right now. That's 4.01 million on the calls and 1.99 million on the puts, if you want to be precise out there. A lot lighting it up more towards the latter portion of the week. Mr. Meatball, I know a lot was probably catching your eye out here this week. What VIX options trades were lighting up your tape this week, sir? Oh, I think Mr. Meatball has muted himself. Mr. Meatball, are you there, sir?
I am. Yeah, there's been a lot. Sorry about that. I'm trying not to be loud in the background, but lots and lots and lots of put trades. A few of our old 1x2 friends. I noticed. Here's kind of a fun one. A customer did on Wednesday. Customer did the December 26 37.5 1x2 call spread, paying 8 cents, and then yesterday a customer did the Jan 23.30 1x2. So we're starting to see some of that with the VVIX lower. Those make a lot more sense when the VVIX is in the 80s. That you'll see some of those 1x2s, but for the most part, a lot of the paper flow I'm seeing is downside. Customers, rolling out of December and buying April or May, or they're doing some Jan stuff. One I kind of like from this morning is customer did the Jan 13-15 put 1x2, buying 1, paying 47.50. I like that a lot. I think I'm a huge proponent of buying a put that is in the money relative to cash and out of the money relative to the future, and then selling something that is out of the money relative to both. The 13's not quite there, but they're kind of at the money, if you will. So lots of kind of downside. Here's another fun one. A customer did the DEES 15 put versus the April 12-15 put spread. They did that one, which is kind of interesting. They paid 115. The put spread was over. Kind of an interesting one. And but they did it 1/3. Paid 114 total. Just lots of weird, unique stuff as people are looking for, I think, clever ways to try and take advantage of contango and all this crazy contango spread that's developed there. You're going to start seeing some really unique put formations with the way the market is spread out. And it makes sense to me. It's what I would be doing. Am doing.
I was going to say, you probably are doing. But yeah, it does make sense because that, you're looking at some of this put palooza that was lighting it up out here this week. And you're right, there are some interesting bedfellows in some of these spreads. Let's just start today because we've tried starting on Monday and going forward. It seems like the latter portion of the week has been the more active portion of the week, except for today, of course. Today, only about 200,000 contracts on the tape. The big spread out here, the big print, seems to be a total of 66,000 of this DEES, I guess, put strip. It's no ratio, though, at least that I can see. It's all 1-to-1. It makes you think maybe a strip, maybe a funky three-way stupid. I don't know. Either it's a 14, 13, 12 half put. Call it a strip, call it what you will. Going up, again, 22,000 times each of those legs for 85 cents, 39 cents, and 25 cents. Respectively. Seems like they may have been buying it. It's a funky one either way. If it's a strip, you guys know my feeling on these multi-leg stupid type trades. Not a huge fan. Yesterday was a decently active day as well. The big print, as Mark was talking about, we're kind of getting into these funky risk reversal time, I guess you can call it. The big one yesterday was 20,000 of the DEES 15 puts versus the 19 calls. That went up for, looks like 52 cents. Seems like paper maybe selling that bad boy. Again, kind of hard to tell. A little bit late and a little bit mid-market. The total, though, funky enough, though, looks like the puts may have been done maybe on a ratio or maybe there was a separate print going up because a total of 40,000 of those DEES 15 puts went up on the day versus a total of only 22,000 the DEES 19 calls. So maybe a bit of a funky ratio out there, really wanting to overfinance those calls. And collect a little bit. Overfinance, I use the term generously. Wednesday was one of the more active days this week, 676,000 contracts on the tape, and that's what Mark was referring to, kind of this ratio put spread palooza, I guess you can call it. What do we have? We have the DEES 12 half 14 ratio put spread 30,000 by 15,000 times. Looks like it had a 13, 14 going up 20,000 by 10,000 times. We had here DEES, again, 13, 15, again, 15,000 by 5,000 times, so 1/3 there. It was just a ratio put spread palooza, 16, 18, 12,000 by 6,000 times. So we always talk about the 1/2 calls. Haven't seen those too much of late. Mark mentioned a couple of 1/2s. A lot of the 1/2s coming back, though, on the downside, on the dark side here, which does make a certain degree of sense given where we are right now. Tuesday was the big day of the week. 820,000, so threatening 1 million contracts. It's the first time we've seen that kind of paper in VIX in some time. It hasn't been near 1 million anytime recently, hence the ADV threatening to break 300,000 to the dark side. And it seemed like another one with this same kind of trade. Let's see if the strikes were the same. No, they're different here because today was 12 half 13, 14. Back on Wednesday, the big fly, straight up 1-to-1 fly, or maybe a strip, whatever the hell it was, 14, 15, and 16 were the put strikes out there in DEES. Went up 64,800 times. So that's a fair amount of that paper. Again, almost 1 million contracts going up that day. So, but a good chunk of it going up in this one kind of three-way put stupid / 1-to-1 fly / strip / call it what you will. Also looks like a bit of maybe a roll of some Nove puts. They went up for size, though, too. Nove 14 puts to the DEES 14 half puts. Doing that. Actually, looks like they may have collected. No, they paid about 9 cents to do this. But still, if you're rolling out there, perhaps not that bad. 9 cents to get a whole other month tacked on out there. and a little bit extra juice to do it. So that went up 32,000 times. Monday was the comparatively light day, only a paltry 404,000, which is about the ADV, the big print out there. Nove, again, kind of these funky term structure contango type plays. This one isn't as wide, though. This looks like it's more just like a roll from Nove out to, again, same print of this one. So this could be, unless it went up both days, or maybe they put it twice here in our notes here. But either way, no, it's different prices. So they went up twice. Went up on Monday as well. So someone may be continuing to roll, or maybe putting it on Monday and taking it off on Tuesday. They did it again on Monday for same, almost a little bit more, 33,200 as opposed to 32,300. And they did it this time for, it looks like, a whopping nickel. So interesting stuff here on this. Mark, anything else catching your eye in VIX land before we roll on?
I think we've talked about that. I mean, that term structure is driving everything. And it's just pretty fascinating to look at how traders are trying to put everything together.
Simon, I know you've been myopically glued to all things Spikes futures this week, but anything catching your eye in the big VIX options land this week, sir? Uh-oh, I think he's pulling a meatball. Has he muted himself as well?
Sorry.
Yeah.
So I guess I would just reiterate that I agree entirely with Meatball, which is unusual. But, the term structure for me is the driver of everything. And just the steepness of it and relative to the cash, there are some decent trades that one can do here, I think.
Well, that crazy VIX term structure, I've said it before, I'll say it again, the answer to all your volatility questions are lurking somewhere in that VIX futures term structure. And soon, once we start looking at it all priced out, maybe we could say the same thing about the Spikes futures term structure. I'm looking forward to parsing and analyzing that one, Simon, when we have more than a week's worth of data under our belts. Let's get on out there now to another product you guys love or perhaps love to hate. Certainly an interesting one with all this funky term structure going on, which is, of course, our old friend VXX. Still close to a 17.5, about a 1740 or so. So that puts it almost unched from last week, this kind of resurgence of vol this week, kicking in to finally stem the erosion of palooza that's been going on out there. Today's volume pretty active, about 153,000. The ADV is also pretty strong up there. It's threatening 250,000 contracts a day, which is a lot for VXX. Let's look at the top positions out here really quickly. Let's see. At number 10 here, we got the Nove 16.5 puts, 31,000. Number 9, the Jan 22 calls. Interesting. 32,000 of those. 32,000 also of the Dees 18 puts for number 8. Number 7, Jan 22 puts. That's more of what I expected. 34,000 of those. Number 6, the Nove 17 puts, 39,500 there. Number 5, the Nove 17.5 puts, about 43,000 open there. Number 4, Dees 23 calls, 44,000. Numero trace here, the Dees 15 puts, 45,000 open there. Number 2, the Dees expiring on the 6th. So these are in the weeklies. 27 calls. Someone's got this, just shall we say, aggressive love for near-term upside here in VXX, and he's continuing, or she perhaps continuing, to keep that love alive, perhaps to the detriment of him. I'll have to dig into this OI a little bit and see exactly when they opened it and what they did with it, but yeah, this is that kind of OI. And I said before, looking at some of the OI in VXX kind of makes me sad right now. This could be one of them. And the Dees 16 puts, number 1 with a bullet out here right now. 50,000 of those bad boys. 16 puts. That could happen. We have a month. It's not, if past is prologue outside of the last 2 years, not a heck of a lot supposed to happen in December, right? So, and of course through the Thanksgiving holiday. So that could certainly be a bridge that perhaps is not too far. Total of about 1.9 million open, about 1.1 million on the calls, and 800,000 on the puts. So calls still leading the dance out here. Got some big prints again today out here in VXX land. The Dees 23s going up kind of mid-market, 10,000 times in chains. Get some big trades out here in VXX land. It seems like it's starting to really, for whatever reason, in the last year or two, it seems like VXX has kind of come into its own. Maybe all this talk about short vol and the debate a year or two ago about the feedback loop and all this other stuff has really started to bring people into the dark side of short vol. I don't know what it is, but it seems like it's driving a lot more paper out here. Also saw a Dees 2330 vertical. It's pretty wide, going up about 5,000 times for 27 cents. Seems like paper bought that bad boy. So no shortage of interesting upside love here amidst the downside put palooza that is the usual paper out here in VXX. Mr. Meatball, sir, what are your crazies up to out there in their favorite product, VXX, these days, sir?
This is another really kind of fascinating and interesting contango play, right? There is all kinds of downside pressure on this index from a vol perspective, from a vol futures perspective. But interestingly, it really hasn't done much for nary a week. On the 18th, it closed 1738 or 1743. Last Friday, the close was 1740. We're currently 1743. So one of the reasons why that VXX implied volatility is getting face punched is that they, like we said last Friday, they basically priced out Thanksgiving last week. Now you're actually making real educated guesses as to what's going to happen with VIX and the VIX curve. So there's what we're looking at is really kind of a boring previous week, but definitely some interesting activity. Lots of activity on the no expiry day 17.5s, which are kind of fun. I was looking at next week's NOV 17.5s. You can buy the 17.5 puts that expire next week for 50 cents. Those are pretty darn cheap, and just kind of downsides trading pretty aggressively. I would point out there's a large end of December 2330 call spread buyer. A call spread trader. He may be closing, but that's maybe the biggest trade of the day. A 5,000 lot of the 2330 call spread went up. That might be the biggest individual trade of the day, but that's really about it. Everything else is just downside bets.
Yeah, there's a lot of love for those Dees 23s today. They had a big print of 10,000, then also 5,000, maybe more going up in that vertical. You're right. Someone liking that vertical, maybe taking it off. I need to dig in. It is definitely not opening that vertical, listeners, nor the 23s outright. So probably some, let's see where they rank. They don't rank in our top 10 here, though. So there, have to go see how many are open on that strike. Meanwhile, really quickly before we get to some of your questions, it was, of course, an earnings week. You guys can find all that great earnings volatility analysis over there, theoptionsinsider.com. Click on that options news and articles tab, the top right corner of the homepage, to begin your journey therein. You'd see Home Depot, Kohl's, Urban Outfitters, Lazy Boys, Target, Lowe's, all the big retail names, Macy's that popped off this week, all profiled there in the earnings move and earnings move results reports. I'm looking at some of them right now. So there's a bunch of these on here for you guys to sink your teeth into. I know you guys love it. Intuit's a bunch of the names on here. That came out this week as well. So wasn't all retailers, just a lot of them. And now let's see what you guys have in store for us with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's get to your questions. Got a bunch of comments and things here about the futures. First off, I want to pay off this guy who was listening live to the show last week. He asked us about the comment on the VIX calls on November 20th, so he needs the options just expiring on the 20th. He said, how would that play with VXX? We said, VIX upside, that's kind of a day that ends with Y. What do you mean? So he followed up with today's bad economic data, the Fed spending $150 billion on repo operations per day, Powell stating maybe that we don't have tools to combat a downturn without fiscal policy, a trade war with China uncertainty. Wouldn't it make sense for volatility being severely underpriced due to SPX jumping massively since Trump tweeted on October 11th, trade deal complete? Now, this is kind of the argument that's been floating out there for some time. This comes from itzsleepy That, people, there's a bit of, maybe I can understand this mindset because there is a seeming disconnect. It does seem like there's a lot of shoes waiting to drop, a lot of irons in the fire, pick your cliche. You have the trade war, you still have some earnings uncertainty, you have a bunch of other things lingering out there that are completely unknown, and yet we have volatility, at least from itzsleepy's perspective, relatively modest, all things considered. And some people have a hard time wrapping their heads around that. He thought maybe that strip of upside calls and VIX options that was open last week, and mostly it's still open, if that, well, obviously not the 20s because they expired, but still upside in VIX. That seems like it's hard for a lot of people to wrap their heads around. Simon, what do you say to people when they ask you this? Like, it seems like there should be more volatility than there is pretty much what he's asking.
Yeah, well, I mean, I agree with your listener 100%. I mean, it seems to me like with all the stuff going on in the geopolitical background that there should be more volatility, but it just hasn't been the case this year. And I guess you will end up losing a lot of money if you just keep betting against that happening. So a couple of things to note is that, as you mentioned earlier in the show, I think the VVIX is around about 94 or something. That's actually pretty high, in terms of sort of levels in history. It's reasonably, it's at the higher end, especially given what's going on. The problem is that realized vol in S&P is actually incredibly low. It's not actually doing very much. And also, with the market gradually going up like this, people generally, when that happens, they're not worried about downside. It just keeps rallying slowly, grinding higher. Realized vol is very low, yet the VVIX is still reasonably high at 94. So that makes it very difficult for people to go and buy optionality because it's just extremely expensively priced. So whilst vol levels as a whole look low, you have to compare the implied to the realized to get a much better sense of whether or not there's value in owning optionality. And right now, obviously, it has not been the case, and there's nothing immediately on the horizon which suggests that that's likely to change.
Yeah, I've joked many times here. You could look at all the macro analysis that you want. But at the end of the day, the volatility calculation is actually very basic math. As Simon alluded to, if the realized vol isn't there, you could look at all the other potential shoes waiting to drop that you want, and you can maybe argue that realized vol is underpriced, and that might be an argument for you to want to go out and buy some. But in general, right now, hovering around a 6, a little bit north of that for a while there, it's hard to argue that vol could be much higher. Because at the end of the day, it's a very, very basic calculation. And all these advanced things we talk about here on this program, that basic math is simply inescapable. All right, let's go on to Simon. A lot of people chatting in here, chiming in about the futures. First, we've got 1328 saying, glad to have more players in the volatility futures game. Looking forward to my first trade. So there you go, Simon. A little bit of love for your Spikes futures. I'm sure that warms your heart, sir.
Oh, absolutely. Thank you, 1328. Thank you very much.
All right, next up, we got a more straightforward question. Ambrose wants to know, where can I get volume data for Spikes futures? So, Simon, should they go to MIAXoptions.com/Spike? Should they go to MJEX? Where should they go, sir?
Right, so that's a really topical and present question. So that will be on MJEX because that is the exchange that actually hosts the futures. It may not be in place right now, but it's going to be there very, very shortly. So keep an eye out. I'll also push that, and we'll try and get that before the end of next week if it's not already there.
I don't think it is live because I checked before the show and I saw this question come in to see if I could find the answer for them, and I did not see it up there myself. So I don't think it's live yet, but should be coming soon there, Mr. or Mrs. Ambrose. Here's another one for you, Simon. You're a popular guy today. This comes from Trigger. Fancy way of spelling trigger here. Thanks for the show. Well, you're welcome. Question for the MIAX hot seat guest. I guess that's you today, Simon. Are there any issues with trading options cleared by OCC against futures cleared by CME? I want to make sure I have all my ducks in a row before I start trading this product. So he brings up an interesting question and a good one. Obviously, SPY options listed on Spikes options listed on SPY, which is, of course, a cleared product from OCC. And, of course, as you mentioned, you're using MJEX for the futures. Is there anything he or the audience should be aware of there, sir, as they're planning their trading?
Well, that is a really good question, Trigger. Thank you for that. So yes, this is one of the I guess outstanding things that we need to resolve. And trust me, every resource is being spent to make sure that we iron out every single wrinkle. This unfortunately remains a little bit of a wrinkle. So you're quite right. Spikes options are cleared at the OCC, and the futures are cleared at the moment at MJEX. There are a couple of things that one can do if you want to do a hedged trade if you want to have a delta hedge trade, for example, on a spikes option, you can use synthetic combos to do that. The majority of VIX options, for example, that trade with the hedge are also tied with a synthetic. So that's one way to do it, because then the synthetic and the option both clear at OCC and you get all of the margining offset benefits. The other thing that you can do is an EFRP, which is an exchange for related position. So if you trade a spikes futures contract, you can actually, at the end of the day, say, well, I want them to be both at the OCC. You can actually do an EFRP and convert that future into a spikes synthetic combo. So, yes, obviously the plan is to try and, maybe at some point, have them at the same clearinghouse. But for now, those are the options that you have. You have two options to convert the futures side into spikes options and have them clear at the OCC together.
There you go, Mr. or Mrs. Trigger. I love our audience. They're very savvy. They're onto all these kind of things. And you're right. There's all the devil, as I've said many times, the devil is in the details when launching new products. Just getting it out the door and in the hands of the trading public. You think you're done. And then there's so many other nuances that have to be taken care of behind the scenes. So even though it's out there trading, the fun has just begun. So it sounds like, Trigger, you're on the pretty savvy end of the spectrum, which a lot of our listeners are. So let us know how it goes for you. Let us know how it goes out for all of you out there as you're trading all of these various products. Of course, spikes, but all the other stuff that's out there as well. Let us know. We do love to hear from you guys. Meanwhile, it's time for now you guys to hear from us once again in the most difficult, the most dangerous portion of the program. Yes, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is indeed the portion of the program where we tell you what the heck we're expecting. From a overall vol perspective, we try to wrestle with those ever-defiant volatility gods and try to pin them down for this time next week. Actually, this is going to be a doubly challenging one. Simon may regret coming on because we have to actually guess for 2 weeks from now, because, of course, there will be no show for the holiday next week. So right now, and it looks like finally, the regulators won't be sniffing down my neck because my streak of bullseyes has come to an end. Still pretty close, but not quite the 0.01 away that I was doing for a while there, which I was worried was going to get me in trouble. All right, so I was at 12.15 last week. The meatball was feeling the downside. He was at 11.60. And our buddy Dave Lincoln of the Short Vol Show, a.k.a. VIX Crush, was uncharacteristically going upside. He's going to the 13 handle. And right now, coming into the end of the show here, we're seeing spikes at about a 13.35. So a little bit north of Dave's prediction there. And a wee bit north of me as well. And then we're seeing a VIX cash at about a 12.60 or so, which puts me at about 0.45 away, and Dave at about a 0.4 away, and the meatball not in the conversation. So it looks like, sadly, I may have to give it to our guest. I may have to cede this one. I was close. I was 0.4. I was 0.45. He was 0.4, and he was closer on spikes. He was 0.35 away. I was over a handle away on spikes. So if you take the two into consideration, then I guess I got to give it to him. Meatball, of course, not even in the conversation, as we expect. All right, so that means the guest won, so he's not here to celebrate his victory. So, Simon, I guess that means you get the highly dubious honor of going first and getting to predict not this Friday, this coming Friday, but Friday 2 weeks from now, where volatility will be, sir. An unenviable task. But we'll all have to do it. You just have to go first. So what are you feeling for 2 weeks from now, sir?
Oh, wow. 2 weeks. It's going to be a holiday. Hopefully nothing happens. Okay, so I'm going to go lower. I'm going to go a VIX level of 12.4.
12.4. Okay, so not that far from where we are right now. A little bit to the downside there. And, of course, a little bit of away on spikes, about a handle away on spikes. All right, I shall go next because I was in second place there. We're at about a 12.60. I can see what you're thinking there, Mr. Simon. And so we go through the holiday. Vol may come off a little bit going into the holiday, but coming out of the holiday, things may happen. Things may percolate. Things may pop off that could drive us back north. I hesitate to say a 13 handle because everyone who pretty much has predicted a 13 handle, outside of Dave did all right this week, but outside of that, has pretty much lost on this show. Let's see here. But I do kind of like a little bit lower in the 12 range. Let's see. I want to give Simon some breathing room. Why don't we do this? I'm going to say a wee bit higher than we are right now. Something's going to come in to inflate the vol. But I don't like saying a 13 handle. It's just not, it won't roll off my tongue. So I'm going to say 12.95 for 2 weeks from now. All right, Mr. Meatball, bought you some time, gave you some time to figure out how you're going to carp us. What are you feeling for vol 2 weeks from now, sir?
We'll have non-farm data out. We'll have a trade war signed. The deal's off. It's completely on. Phase 1 complete. We won't have any Tesla trucks. The Fed will have come out and said, "Hey, rates are never moving again." So I'm gonna say 11.60.
Oh, so pretty much exactly where you are right now for 2 weeks from now. Okay.
Which is what I like to do.
Interesting. Yes, you do. You do. Yeah, I think none of us are factoring in that extra Cybertruck juice that obviously juiced up the market here this week. So there's your market, listeners. 11.60 on the downside. That's the meatball. Simon being a bit of the Goldilocks, 12.40. Me, uncharacteristically going, I usually go a little bit north, this is a little bit more for me, up to about 12.95. So still a pretty decent, pretty tight market for, not this Friday, not this coming Friday, but Friday 2 weeks from now. All right. Unfortunately, that music means we've come to the end. My voice survived. Hallelujah. Orange juice, some cough medicine, and a ton of Listerine in the back of the throat seems to have done the trick. But before we go, listeners, let me go back around the horn. Let's start with our guest, Mr. Simon, who's still basking in the glow of having those new futures out there. Simon, if folks want to learn more about the futures or indeed all things spikes, where should they go? And also maybe they want to kick the tires on some crypto vol or maybe some milkshakes. Where should they go for that stuff as well, sir?
Well, for milkshake and crypto and for all the other stuff we do, T3index.com is the place. And MIAX has a dedicated spikes website, and MJEX also has a website dedicated to the futures. And I will, by next week, make sure that we have all of the futures data for spikes available as well.
There you go. All you hardcores who are looking for the data, you want to put together the term structure, do all that fun analysis you're talking about, then you'll have that data at hand shortly. So, yeah, if you want the good old spikes info, MIAXoptions.com/spikes. It's got a great overview page, snazzy little video, and a link to a fun show called Volatility Views. You may have heard of it, I don't know. All sorts of good stuff over there. And, of course, T3index.com is the place to go to get your milkshakes index on and your bit vol and pretty much every other flavor of vol that you can think. You'll be happy, Simon, to know I did reference your milkshake index on another show. So I gave you some love on completely unrelated programs.
Hey. Thank you. Good on you.
There you go. I'm not sure if our other friends in the dairy world were excited about it, but I gave it the love nonetheless. Who doesn't want to talk about New Zealand dairy volatility? Good stuff. All right. And Mr. Meatball, sir, if folks want to learn more about what you guys are up to, maybe talk some of these fun contango trades you're looking at and pricing up, maybe talk about some VXX erosion, take a webinar, where should they go? What should they do, sir?
Yeah, hey, go to optionpit.com and check out everything we're doing. We'll have a big Black Friday sale. We're going to make the announcement of the stuff that we're going to have on Tuesday and Wednesday. So if you're not on our email list, go to optionpit.com and get yourself registered. Nice little yellow bar at the top. Give us your name and email, and I'll send you an ebook just for signing up. So come and visit us. Optionpit.com.
Ooh, free ebook just for signing up. Optionpit.com. I'm going there right now after the show. He's finally going to be selling those. Have a great deal on those bobbleheads of me he's been threatening to make for so long. So head on over to optionpit.com. Get your hands on them while the getting is good. And on behalf of the Meatball and Mr. Simon and our friends over there at MIAX, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. Keep them coming. Love to hear from you guys. And we'll see you back here. Remember, enjoy the holiday here next week. There's a holiday here in the U.S. Listeners abroad, just enjoy some fun time with your families. And we'll see you back here in 2 weeks for more Volatility Views.
Volatility Views is brought to you by MIAX. one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.